Now time for today's finances with Barbara and Tressa from Rockwood Stone Wealth Management. And today they're going to give us a rundown as to why we need a Roth IRA. Good morning, ladies. First off, let's talk a little bit so people have an understanding of what an IRA is and then go into the Roth IRA.
Well, an IRA is a tax advantage savings vehicle. An IRA stands for individual retirement account.
Okay.
So anytime you put money in that account in a traditional IRA, it's tax deferred, meaning someday later in life you will pay taxes on that money.
Okay.
In a Roth IRA, you've already paid taxes on the money you put in, but all of the growth is there tax-free. So you will never pay taxes on any of the money you take out of a Roth.
Okay. All right. Great.
So let's say again that you contribute $1,000 to a Roth IRA. You're writing a check. You know, you've already paid taxes on the money. It grows to $50,000. You never pay a penny of tax on that money ever.
Wow. Okay.
So it's really important that for a long-term investment, particularly for young people, that they think about opening up a Roth now. We don't know how long they're going to be around. You know, Congress is looking for tax dollars, but right now it is one of the best savings vehicles you can have.
Okay, so is this something that we can get at any bank, any institution? Like,
you can open up a Roth IRA and invest in anything you want. A lot of people think, well, last time I had an IRA, it didn't do very well. Well, the IRA is not the investment. You can invest in anything you want in a Roth IRA.
Okay.
So if you're a conservative person or you want to put it in the stock market, whatever you want to invest in, you can. Just put the dollars into the account.
Okay.
So.
Yeah, the idea of IRA means that it deflects any taxation. Okay, so you can put savings, you can have a Roth savings account, CDs, stocks, bonds, mutual funds,
whatever
you
you
name it, depending on the institution that you go to.
Okay.
But the Roth comes with a lot of perks that people don't realize, and this is why it's so important for people to consider having a Roth, especially young. In a Roth IRA, let's say you're in a pinch in life, and you know that that money was saved for retirement, but you really need the money. You can withdraw your contributions out of a Roth and not have any taxes or penalties. Now, we said your contributions, you can't withdraw any of the growth while you're a young person, but you can certainly, if you put $5,000 in a Roth and it had grown to $6,000 or $7,000, you can still take $5,000 out at any time and not worry about taxes and penalties. Also, if you're a young couple with a child, it's a terrific way to save for a child's college education. And if you end up not needing the money for college, you've built a great retirement account.
That's interesting.
But if you do reach in and take money for college education, you don't pay any taxes or penalties.
You know, we advise some of our younger clients, we always say you need an emergency fund. You must have an emergency fund to begin with. Well, you can make your Roth your emergency fund because any money that you put in, you can always take out. You just can't take the growth out until you're after 59 and a half.
Sure.
Yeah, Haley was saying that they'd like to save for a home. So if you were saving via a Roth IRA, you could take the money out for the purchase of a new home, your principal residence, without any penalties and taxes.
Wow.
So these are perks that mean a lot, I think, to young people. And if you're able to save from the time you're 25 to 65 in a Roth IRA, and you didn't have to use it, and you maxed it out, you'd have about $1.4 million if it grew at a long-term rate of 8%.
So at like how much are people putting?
$5,000 a year.
$5,000 a year.
If you're under 50, you can put $5,000 a year in. But a couple of caveats: you have to earn the income. Okay. And then there are some limitations. If you earn too much money, you won't be able to contribute. If you're filing single and you earn more than $110,000, the amount that you can contribute diminishes. If you're filing joint, I think it's $173,000. After that, the amount that you can contribute diminishes as well. But again, if you're young and you're earning less than $110,000, try your best to go ahead and open up a Roth now and contribute as much as you can, hopefully up to $5,000.
All right, some great information. If you want to see this again, you can go to our website and our Facebook page.